Ladies and gentlemen, it's me, James Sweeney, coming at you with a special commodities report this time in the afternoon here in Brooklyn, New York. And the only reason why I'm doing this is because I probably got about 15, maybe 16 different text messages about oil prices hitting $0 in negative territory. What does this mean for oil? How does this make any sense? Well, let me try my best to break it down for you, because number one, you got to remember that a long time ago, I was a NYMEX broker at the New York Mercantile Exchange. I was a runner and then a broker, did the overnight Globex trading stuff. Very glad I'm out of I'm out of that after quite some time. Actually, a little too long. I don't want to think about how old I am. But let's talk about it right now. Oil prices, they managed to hit an all-time record low of $0 a barrel, went into negative territory. Negative $37.63 is where the oil market closed for future deliveries for the month of May. That's the lowest since oil began trading over at the New York Mercantile Exchange back in 1983. Now, you're probably wondering, does this mean that gas prices are going to go really well down, or are oil prices going to continue to slide? The truth of the matter is that these are futures contracts. So this is setting the price standard for the month of May, which, by the way, that contract is expiring tomorrow. So this literally is saying that we have such a little demand and so much supply that we have so much excess oil that we can't even give it away for free, because we also have no storage room for the month of May. Now, what people really should be paying attention to instead is the month of June, which is the futures contract, which is already trading, but it's not the front month until Wednesday morning, and that's trading around $22 a barrel, I do believe. So that's the one you've got to focus on. Also, if you're wondering why oil has been tanking so much, obviously the coronavirus, people aren't driving, people are not taking any airplanes, people are not allowed to be on their boats, so who's going to use oil? As a matter of fact, India, the greatest example recently, their road traffic is down to about 5% of their normal traffic because of martial law, where if you're out there on your little moped or you're out there in your car, the cops can pull you out, beat you with bamboo sticks, and throw you in jail. Some of those videos have went viral. So that's why oil prices continue to tank, and front month prices are down, because it's also the end of the month for contracts. So we're talking about the prices for the month of May, and all of those trades have already been decided for mostly last week. And keep in mind, the other real reason, and this is very important to note, as to why oil prices are on the downside, is Saudi Arabia, OPEC, and OPEC Plus, which includes Russia, because for the past 2 months, Russia and Saudi Arabia continue to fight back and forth about cutting production, not cutting production, who's the leader of OPEC, who's stronger, Saudi Arabia or Russia. They haven't been playing nice, and they kept on pumping a ton, and I mean a ton, of oil into the markets. So much so that the markets are already oversupplied. So whether it's in India, technically China, here in the United States, we're already reaching our storage capacity. So what are we going to do with this excess oil, which then plays into the May price, because people are saying we have so much oil, just take it out of our hands. Saudi Arabia comes into play, because Saudi Arabia has been propping up or keeping production at the same levels, slightly lowering it, not too much, because the end game might possibly be this: if you keep oil in crude oil, US crude oil, at a level that's very, very low, below $0, at a negative, literally free oil, give it away, we can't survive, US producers, US companies, they're not going to make a profit, and they're going to have to shut down. While Saudi Arabia will continue to exist, because it's the kingdom of Saudi Arabia, and in the long run, perhaps shutting down US companies or trying to slow down the growth of US companies and keeping oil at a steady production rate with low demand, very high supply, may not work in their favor in the near term, but perhaps in the long term. Might be a little bit of a game. I guess you heard it from me, right? For Modern Wall Street, I'm James Sweeney.